week of March. I've got the SPY up on the screen. Why? Because you can see this is the beginning of the year, so we have 2018 over here. We have just a run up for all of January. Then we have February where it dropped down. We had a low of 257.59 and it ran up to test a support level up here of 280, 279, and then pulled back down and is now at another sort of area of support. You can see these lines are prior support that I have drawn onto the chart. Back on the yearly chart here, I backed it out for you. You can see that this was really the first level of support, and it looks like, again, this could be a bounce zone for further continuation up or downward trend as well, back down to 257 or below. In my opinion, if it closes up above 270 in this upcoming week, we're going to see more of that upward trend continue. However, this volatility is definitely great for the day trading world. As you can see, I'm back on Profitly. I've been posting my trades. I'm now top 5 for percentage gains for the past 30 days. So if you don't follow me on Profitly, definitely go over there and check it out. It's a great way to track your trades, see your results, and just track what you're doing, because it's important to see what's going on. As you all know, obviously I do have my blog, cjanetrade.com, and there I do put up tidbits. I just posted about my friend Michelle, she is starting out in the day trading world, and I did a pointer of, you want to get into day trading, do you have what it takes? I also have coordinated with Jamie Ben-Isri from Legal Logik, and we're doing something called Market Logic. We're going to do it once a week, and also locally here in Montreal, setting up a meet and greet to meet with people about trading and some legal aspects too on March 27th. Further details to come, and I'll be posting them here on my LinkedIn. So as we get into the week ahead, as you guys know, always, I'm not a licensed financial professional. So these are all my opinions. So please do your own due diligence, trade properly with proper risk management. First one on my long list this week, we have AVGR, Avenger. So someone had requested that I go back and I back it out to the 15-minute chart, which is what I like to do. So I have a support level here of 122 and then a resistance level of 131 right here. You can see it looks like it tested it, but it didn't break out. Above that, I would look for the 150 mark for the breakout. The reason why I like Avenger is it's got 33 million in the float, and on Friday it had 60.49% short float volume. So if we do look at the yearly chart, it did pull down, had a massive gap down here. It did have a split here. You have 1 for 40. So many times when you see that, we do see a continued drop. However, now we're in an upward motion. It does look oversold on the RSI, and if we step it back, this is an all-time low for the stock right here. So I would just go ahead and say, keep this one on watch. It could definitely squeeze on Monday. I wouldn't say it's going to squeeze that much, in my opinion, but it could squeeze up, maybe go ahead and test the 2 mark if it gets up that high. If it were to go ahead and break above 185, we could see a gap fill here up to 250 for the low of this candle. Next on my list is Dillard's. Now Dillard's does have 10.77 million in the float, 64.26% short float volume on Friday, and I have my support level of 86.19, resistance of 88.51. We pull it back, you can see right here, I might even go down and give it a support level, to test of 85.89 if you wanted to give it a little bit more wiggle room right there, another 40, 50, 60 cents to the downside. So basically a good $2 range that if it breaks out in one direction or the other, I think the momentum will continue. And we had it there on the yearly chart. So you can see that here it is a new 52-week high area. So it can definitely break out higher. We pull it back. You can see it's somewhat of a resistance on the 5-year chart, the weekly chart here. So if it does break out, it could test up to 94 before it would test up to the 98 level and then continue on up here, probably up to 100. So definitely keep it on watch. It is in an upward trend overall, and they do have earnings due to be reported, but not until May 14th. So we still have time on earnings for that. Next on the long list, we have ASDN, Same thing. This happens to be the 5-year chart because we were on it already. Definitely upward trend, upward movement in breakout zone. We have 66.51 was the year high. So we'll step it back. This is the year to nothing but upward trending. Go to our 15 minutes. Okay, so we can see the support that I've created here, or the chart has created, I've just drawn the line, of 65.29. And the first resistance right before close on Friday of 66.18, and then further the high of the year of 66.51. Now, this one's interesting. It has 15 million in the float, and on Friday it was 49.85% short float volume. So keep it on watch for a breakout of the 52-week high. Next one, we have APEI. Now, this one does have big range to it. This is the 15-minute chart. And I would say a support of 32.35, the high right here, but you can see it actually closed after hours a little bit lower at 32.20, so maybe give it a little bit more room to the downside of 32.10, the high of this candle here, or even 32. And breakout of 35.40, it is at the year high. And it's interesting to me because it has 14.78 million in the float and 49.31% short float volume on Friday. When we look back at our yearly chart, you can see it's just in breakout mode. 5 years, we have hit somewhat of a resistance point. It could continue up a little bit more to 37.50-ish area before you might see a pullback. So another $2 to the upside. So just keep it on watch. And the last one for the longs for the week, we have Mdb Fl. Pretty funny. Okay, we'll go back to our 15-minute chart here. So this one's really interesting. It's got less than 10 million in the float, 9.3 million, and 47.81% short float volume on Friday. So I would go ahead and put the support level right here at 35.19. If you wanted to go even further down, you could go 34.60 for support for potential long entry, and resistance of 36.35, which would also be your potential short entry if it were to break, cover quickly, because this one, like I said, has that 9.3 million in the float. And we go and we look at it for the year. Again, new yearly high of 36.35. Go further back. We don't have anything further back. It actually broke out on, let's see, daily chart here, 1 year. So it looks like it broke out on Thursday and then had continued upward movement on Friday. So it depends on what the market does on Monday. If we start to see that the market is selling off, I think a lot of these 52-week high stocks might potentially pull back for a continuation up later, or they could just go ahead and tank. But lately the market sentiment has really been driving the action that I'm looking for the day. So if I see that the markets are red pre-market, I'm looking more for shorting of stocks, because the overall trend of the market, in my opinion, is going to be downward. If you start to see that the markets are up pre-market, then you're probably going to see a lot more stocks going up throughout the day for the overall trend of the day. Another cool site to see where you can see the sentiment of the market as well is finviz.com. So you can see right here, actually the market overall was fairly green on Friday. As you saw on that SPY chart, we did have a green day overall. And you can see the big areas of the sectors that are doing really well. Amazon up, Google up, Apple, Disney, Exxon. I think that's, no, I'm not sure. I believe that's Exxon. Johnson & Johnson, Pfizer. Now Merck, I actually have Merck on my list. We'll go back over here to TradingView. So we'll get to the shorts. Merck is actually one of the ones that I have on my short list based on where it is in the yearly chart. It did hit a new 52-week low on Friday. It did close up on the day, but it had hit a new 52-week low. So I do have this one on watch for short. And we'll go to our 15-minute chart. So I would say a support of 54 to be broken to the downside for further drop down to 53 area. And if it continues on down below 53, and 54.45 for this resistance to be broken. You can see that it did hit a new low. We'll go back to the 5-year. So below that, we look like we could have 52, and then, continue on down. It looks like a double bottom was created here around 48. So it does have some movement to the downside potentially. Next on the short list, we have PK, which is Park Hotels Resort. Now, Park Hotels Resort has 160 million in the float. I forgot to tell you all that Merck has 2.7 billion shares in the float. So Park Hotels, we have 160 million in the float, support on the 15-minute chart here of 24.40. It looks like it did create a double bottom, maybe some after hours or a late print here of 24.86 for further downward trend, and a resistance of 25. So I would keep this one on watch. Again, close to the new, it did hit a new 52-week low on Friday. And when you look back at the yearly chart, nothing below, clear skies below, as we like to say. So overall, it looks like it does have potential movement for that one as well to the downside. We have ALB here. We'll bring it back to our 15-minute chart. So ALB, you can see it pretty much channeled on Friday between 93.43 and 95.56. However, looking at the daily chart, we back it out, it has just had downward trend movement overall. We had earnings that was negative $3.18, so it definitely has some more room to the downside. Again, it's $3 or $5 off of the low of the year, which you can see was back here just past February a year ago. So definitely keep that on watch. It could go lower if it breaks the 90 area. I would look down for 86, and then further on down it could go down to 76 overall if it were to really continue in a downward trend and the market trends downward overall. Now ALB does have 110 million in the float, excuse me. SWX is the next one on the short list. You can see here we're looking at the yearly chart for daily. You can see that it pretty much did hit a new 52-week low on Friday. When we go to our 15-minute chart, I didn't put the support level right at the 52-week low because I think it looks like support really developed here on Friday throughout the day at 63.28, 63.30 area. If it were to continue down from there, 62.50 would be the next level to watch, and then further on down from there. I would look for a resistance level of 64.37, which was the high of the day, because we do have this gap up here, I would say to $65 to watch. So keep it on watch. It does have 47 million in the float. You did see it on the yearly chart. Right here, there's nothing. If we look left, as the saying goes, you look left to see what's there. Okay, so here we'd had a previous resistance level turned into support, came back, and now we're testing it as support. So it could flip again and turn into resistance as well, and then potentially drop down to the 51 area. So potentially $13 to the downside if the movement continues downward. Last one on the list is Foot Locker, the biggest loser on Friday. So Foot Locker, we've got it here like this. We have this line of support, which looks like it became resistance. Many times you will see that resistance flips to become support. So I have that as a support line of 39.37 and resistance to be broken of 40.27. When we back it out on the year, it's not quite at the low of the year, but we do have a gap down to the bottom right here. So if it does break 38.41, which it tested that on Friday, 38.17, it looks like people bought it. They didn't want it to drop below that. It could potentially drop down, go ahead, fill that gap to the downside of 36.91, and if possible, if that support level breaks, continue on down here to potentially $33. Now on my longer term swing list, potentially, we have MDT. This is a 1-year chart right here. It is finding support bottoms. It's up about 3%, 5% off the bottom. It could continue an upward trend. We'll look at them on a 5-year chart, give you a better perspective. So for the year, it's got some room to go down a little bit to the bottom of the year of 76.52. I would use that as my exit strategy if I were to get in right now. We've got the 200-day moving average, let's see, right here. So if it were to continue on up, we've got up to $82. Next one on the long-term watch list is ORA. Has found a bit of support here, found a new 52-week low, but it bounced up on Friday, so keep it on watch. It could, if it holds 55, which I would use as my potential mental stop to exit, I would see that it could continue on up, and we've got about $20 to the upside there. AZO as well. AutoZone, oh goodness, here. I've been trading this one. If you guys know me on tradealike at all, you can see that this one really has been moving a lot. I do use Fibonacci's as well when I'm trading. I'll just leave this one here. You can see. So I've found this trend line here. It's pretty much been going up and testing it, and the support levels down here of 646. If it holds above 650, I'm interested in this one longer term. I did actually swing it overnight on Friday. And we have Celgene as well. Celgene is another one I've been trading lately. So I would keep it on watch. We'll go to our yearly chart. It's hit a new bottom. Massive potential to the upside. It had a massive drop back here in October. Bounced up. More bad news about a stock being sold off, or not continued with the FDA for multiple sclerosis. But it looks like the market might have found a bottom area around 87 here. So it could be a long-term swing. I would say, you know, potentially you've got 86.55. It's found that low. It could go lower potentially. If we go to the 5-year chart, you can see, I would say I would use 84 as a potential mental stop, exit, and position accordingly. So as always, if you haven't already checked it out, go to moderntradersummit.com. We've got over 40 years of trading experience coming. Seats are selling out, and I definitely want to see you and meet you in person and help you along in your trading journey. Have a great week ahead, guys. Carpe profit. Seize those profits one trade at a time, and you'll be growing.